I have here Gav Blaxberg from Wolf Financial, and we are talking about the rise of retail investors, perhaps the revenge of retail investors. And we saw a lot of this, what we're going to be talking about, of course, with the whole GameStop brouhaha back in, what was it, January or February? I can't even remember now, a couple months ago. And we saw the power that retail investors now possess. And historically, and maybe I would surmise that this is still the case in the present day. That's kind of my contrarian view to my guest's contrarian view. It, institutional investors moved markets, and stocks, especially large caps, would not move in one direction or the other unless there was major institutional heft coming in and buying or selling. So we're talking about the pensions, endowments, sovereign wealth funds, mutual funds, hedge funds, and all of those big institutions, like I said, that control literally trillions of dollars. But you're saying now that what happened with GameStop is not an anomaly at all, and in fact may portend what we will see in the future with public markets. So let's open with that. Over to you and tell me about your views on this and why you have them.
Sure. Thank you, Nathaniel, for having me on the podcast. Great to be here. Speaking a little bit to retail, that's an area that I really focus on. So I love the concept of following social sentiment within the markets, following what people are talking about on social media. And there's actually a bunch of companies that now this is their sole purpose. They measure social sentiment, they put it out daily, and people pay attention to it. And the reason people pay attention to it is because they know that it can move the markets. And so I actually did my research on this back in November of 2020. So this is prior to any GameStop, anything like that, is when I was looking at this and saying, people are simply moving the markets. We've been told that forever, retail doesn't have an effect. That's what we were hearing, right? Throughout the beginning of the pandemic, as stocks are flying up. So by November, you at this point have already 6 months of stocks just flying. And people are saying, could it be that retail is coming in with their stimulus money and our access to Robinhood? And we're being told, no, it's not. It is, you just can't move the market. And that's because up until really 2019, end of 2019, there was a 10%, just 10% of the market was made up from retail investors. But I believe that number had changed. So I went out to do some research. Essentially, my research led me to Nick Majuli. He's the COO at Ritzos Wealth Management. You can check him out at Dollars and Data, I believe, on Twitter. And Majuli had basically done a trading data analysis on the 200 most popular stocks on Robinhood and compared their daily price movement. And without going too far down the rabbit hole before we get into this, essentially, while the correlation for large caps was minimal, for some of the small caps that had seen massive amounts of social media bullish sentiment, there was extreme correlation and movement within their caps. And those were primarily represented, and this is kind of the OG GME in the Kodak movement, where Kodak got this deal that was supposed to bring them in, I guess, billions of dollars. They were transitioning to being another company, and their stock flew. And then we also saw it in Nikola and in Moderna.
Very interesting. Okay, so this is still focused mostly on the small caps. And by the way, I may have at the outset called it GameStop. I keep getting that confused whether it's GameStop or GameStop. Of course, it's GameStop. I've been to the store, but I know the meme was GameStop or GameStonk even.